How goes it all? Welcome back to Patterson L Properties. Hopefully, you guys are having a great and exceptional day. Don't forget Patterson L Properties. We also sell real estate in the DMV area and the Pennsylvania area, specifically Harrisburg, Reading, Pennsylvania, Allentown, and Reading. Yeah. So today's subject matter is going to be like, hey, are we living in the times of the private money lenders only when it comes to investors? Well, I've been hearing about private money lenders since I got into the real estate investment business back in 2018. The short of it all is people with lots of money create real estate contracts for and lends money to potential real estate investors, whether they're flippers, whether they're people trying to have a rental property, whatever the case may be. Now, most of the time, potential investors their credit doesn't really matter like that, like it would with a regular traditional bank, like your Bank of America's, your Chase Banks, Wells Fargo, et cetera, Citibank, et cetera, and so forth. At the end of the day, with private money lenders, all they care about is the state of the real estate deal. And when they get their money back plus interest, all they care about is the numbers, all the numbers game. They don't care about all the other normal stuff, other stuff as the normal bank lender would particularly be interested in. So, AKA the end game, not a 15 to 30-year loan. According to the article that I read the other day, with interest rates climbing, lenders less flexible and cash flow models are being tossed into turmoil. Many investors are considering hard money loans as a way to keep growing their real estate inventory. And for most real estate investors, working with private money lenders will help one increase their real estate portfolio tremendously. So let's get into the pros and cons of utilizing hard money lenders. The article stated that the speed to close on deals can put you in a favorable position if you are competing against offers that may need 30 or more days to arrive at the closing table. Sellers sometimes love quick closings, so using a hard money loan could help you land the property. There's no loan maximums like it is with traditional banks. The article also stated that since all hard money loans are private and non-conforming loans, the individual hard money lending companies set their own rules, and many of them will continue lending to you as long as the deal continues to make sense all at the same time. Hard money lenders will help out home flippers expand their operations on a daily basis in a great way. The article also stated that that the very nature of flipping in a large number of cases requires significant investments into the property for construction. In simple terms, a lot of flippers buy distressed properties, invest in some cases a significant amount of money in the rehab, and then flip it, sell it to the owner occupant. And also money for construction on a new rental property can help expedite the process of getting the renter in your home. With inflation on the rise, hard money lenders can help make things easier for the flippers and investors. The article stated that each project will naturally have milestones that are established. For example, a milestone could be to complete all exterior work, which could include roof gutters and exterior paint. Once the milestone is met, the hard money lender will send a representative to confirm that the work is completed and then provide a draw to pay the contractor or contractors involved in the work. Now, when it comes to the cons, because there's pros and cons when it comes to anything in this life, especially in the real estate industry, the article stated that hard money loans, as I'm sure you know, are more expensive than traditional loans. Let's use today's time frame of April 2023 as comparison point. Today, a traditional lender will provide real estate investors with an interest rate of around 7%. That could include points according to share with Longhorn. Her company is currently charging 12.99% interest only, along with 3 points. So while you'll make interest payments each month, you won't have the extra principal pay down costs of traditional loans. The interest rate difference will impact your profit, no doubt. So it's critical to figure in this difference when running your numbers on investment properties. Also, other things to consider, unlike traditional loans where you could lock in a rate of 20 or even 30 years, hard money loans have a different set of rules. Generally, hard money lenders require full payback balloon payments within 6 months. So it's a caveat, 6 months. It's not the regular traditional loan. That's why majority of the time, in my personal opinion, hard money lenders work for the fix and flippers, okay? Or it works for a person. It works for the investors that have a great investment deal, but they just need the extra capital and whatnot in order for them to close the deal, and they don't need the full amount of money that they need in order for them to close on the deal. Or the deal is so sweet that they will be able to pay back the hard money lenders not within a certain shorter time frame, or maybe even earlier. But it just depends on the situation. All right. Certain lenders, for an additional point or two, may extend the loan for an additional few months. There's always there can be, not always, there can be flexibility. Bottom line is, you need to move quickly when you close on a hard money loan. Read the terms of your agreement to ensure that you understand the payment process. That's all I can say. The article went on this note stating that the credit scores will generally need to be between 650 or higher to secure the hard money loan. Most hard money lenders, in spite of popular opinion, want cash in the bank. Share mentioned that Longhorn likes to see liquid assets, cash reserves of 15,000 or more. And obviously, at the end of the day, people would be a sucker. It's like literally you're a loan shark if you're going to lend somebody money and they don't have any money saved in the bank. So that's why the biggest money move anybody can ever make is to save money in their bank, to show that, hey, I am a risk worth betting on, and I'll leave it at that. So be prepared to share bank statements. To add to the point, hard money lenders will only loan 70 to 75% of the after repair value, or ARV. So you will have skin in the game no matter what the situation is. But either way, in today's world, having hard money lenders is a great choice as long as you know how to utilize them all at the same time. But on that note, do the great things, like, share, and subscribe. Hopefully you guys have a great day. And in the comment section, let me know if anybody has had any specific good or bad or both experiences with hard money lenders. So as I always say, do the great things, like, share, and subscribe. Have a great day. Make money moves, or you're going to live like a fool. Take care.